All right, good afternoon or good morning. Welcome back here to Trader Minute. Great to have you aboard. Market's been open here for about an hour and opened up higher, has been selling off since here a little bit, and just not in any sort of monstrous massive way. We still have the market up about 20 points, but you can see that since it opened right up here. Let me mark it for you. We've seen, a sell, a rip, and we're getting a current dip right here. So about, 16 points off the highs here from today, but still with a green market, no real bottoming volume or anything like that coming on in. We still have, fairly bearish market internals, and what does that suggest? Well, that suggests that the volatility is going to be higher, and that's what we continue to see, and what I expect that we will continue to see, for a little while here. Let's start with the challenge. We have J.P. Morgan, Procter and Gamble here. Procter and Gamble's going for 285, and J.P. Morgan. I know these are moving around. 285 and 310. So 285 and 310 here. So that puts the challenge just shy of 4,000 here. Both stocks sold off into the close yesterday. Not a fun start for any type of position. I wish we all always had the Netflix rise, where we get in and the stock just rocket ships. But, simply not the reality at all times. Neither stock is close to its price target or stop area, so not making any adjustments there with those. And, if you take a look here at JP Morgan, just kind of see it pushing above yesterday's highs a little bit. And then Procter & Gamble, which opened up red here today, I've seen, some fairly steady buying here throughout the morning, but nothing too dramatic with either of them, and nothing to adjust with them. Now, as far as the crossover list, there are no new signals on the board, but we do have some downside crossovers. Chipotle, which was a bullish signal yesterday, but not trading it because of earnings. We know the earnings just kind of a bit of a wild card. Therefore, it doesn't make sense to go and trade it for the challenge when it's at these levels. As the challenge grows, gets above 10 grand, there will be certain earnings where if we do see a signal, I will go and get them, and we'll go and play them because we can afford the loss if it comes in. And the rewards on them tend to be really good if you're right. So Chipotle, has a downside crossover here today. Chances slim of it triggering, but it could. Ford, which is just getting lambasted here today. Let me show it to you. You always hear this argument, and we heard it yesterday on a major market news show that somebody knows something about Ford and what their earnings are going to be, and they have been steadily buying because they have insider information, and Ford is going to explode higher after earnings. Oh, whoops. They didn't know anything. It just happens, all too often, right? Where, what the stock does ahead of earnings has nothing to do with what the earnings ultimately be or are. We saw this back here in July where the stock ripped on the day before earnings and then dropped hard. It's just not uncommon there. Chances of signaling today very slim. And then Nike, we have Nike here, which had an upside crossover yesterday, but didn't qualify as a signal. Getting a little downside crossover here today. Now, the upside scan, it's full of stocks that were on the upside scan yesterday. They're sold off into the close. Bank of America, Dollar General, for example there. But there are some new ones here. Halliburton, Apple, Micron, they're new on this list. And, we could be looking at signals coming in for stocks like Micron today. We'll see. It has a pretty high consolidation risk component on it right now. But Apple here as well could trigger by the end of the day, but also has a a very high consolidation risk component. And then Under Armour, which seems to be on the scans all the time. Yesterday was on the upside. 2 days ago was on the downside. And it's one I keep thinking, all right, eventually we're going to get a signal because it's going to, trend one way or the other. But so far, we have not seen any real trend emerge, here from it. It's just one where it has stayed comfy and cozy in this consolidation wedge here. Ultimately, will it break out? Yeah, it will, and it'll probably be a pretty hefty break when it does. We saw Netflix make one of these breaks the other day where you get this little kind of consolidation wedge action. Under Armour has a much bigger one going on, but oftentimes these things can have some very, very big breaks in them when they finally do break on out. So no new signals this morning, but those are the crossovers, here that are on the board. Now, we had some economic data last night, and, you go to the coronavirus stuff, and there's talk of a vaccine, and, is that story over? No, it'll keep coming and keep going. But we saw some Japanese PMI numbers last night where, Japanese economy went into, or the PMI went into growth on both the composite and the services level. That means manufacturing level is still contracting there in Japan, but better than expected, better than prior here on that number. We had the services number here out of China, which came in better than expected, but lower than last month. And given everything that's going on, that's a pretty good number. We had the U.S. ADP employment report this morning, and this is ahead of the government jobs report on Friday. But consensus was for 154,000, came in at 291, almost double. That's a huge number. That's just a huge number there, for it, and very bullish in terms of its implications. Then we look at the Eurozone PMI composite, and not only did it beat, its prior numbers, but beat the consensus numbers here, and is in a pretty good spot, but being led also by manufacturing. Services actually slipped just a little bit, even though they beat consensus. So it tells you there's some manufacturing uptick there. So that's a second revision of that number, but a very solid number overall, here for the markets. And then we have the PMI services number here in the U.S. It came in at 55.5, and some growth there. If we come into the Institute of Supply Management and take a look at the number, the breakdown on the number, let me pull it up. Non-manufacturing. All right. If we come on down and we take a look at new orders growing. And that's what you want to see. A little contraction in employment, but business activity increased. Inventories, contracting, which is never that bad of a thing. Prices falling, backlogs falling, new exports falling, but imports grew a ton here on that. So, a generally solid number here. But, being weighed down by some of the energy sector, when you look at it. But, overall, a better than expected and fairly solid number there. So, when we talked about earnings, what was that, Monday? We talked about the fact that what does earnings season basically say to us? It says to us that the economic data going forward matters, and it's going to matter a lot. And if the economic data grows, there is plenty of room for stocks to grow. If the economic data contracts, there is plenty of room for it to fall, and maybe more so than what we have seen in the last 3 years. And so far, the data that we are getting, and we saw a mild improvement in January. We're seeing greater improvement right now. Some of the January numbers were able to kind of be thrown in that but category because of the U.S.-Chinese trade dispute. but we are seeing numbers picking up, and that is a general positive here, for them. Again, we get economic data all the time, so it's not one where you can look at one piece of data and say, well, boom, there it is. But when we look at on aggregate how things are going, we are seeing improvement, and improvement at an increasing rate. It's not super fast, but the economic Ferrari is starting to accelerate. Right? It's been at it came upon the yellow light, has been decelerating. The yellow light has turned green, and so it's just kind of going through the intersection right now, trying to accelerate a little bit without getting hit, and still susceptible to being hit a little bit. But so far, a lot of kind of green shoots out there, in the data with what we are seeing. All right. Alrighty. So that's challenge crossovers, some of the economic data. Last thing here, and I mentioned this yesterday, but was asked, do I trust this rally? And it's something where I gave you a few thoughts on it yesterday, and that question is kind of just rang around in my head here all night and this morning. And do I trust this rally? And when it comes to the market, I don't trust anything. I think when it comes to the market, to trust the market is kind of insane because anything can happen any day, right? So you have to look, and instead of looking and say, well, what's going to happen, right? And trying to be this predictive, element, this crystal ball element, you look and you go, okay, this is what could happen. All right, this is my risk. This is my possible reward. Do I want to take that? And, yesterday for the challenge, right? Am I super comfy jumping into Procter & Gamble and JP Morgan? Admittedly, no. Admittedly, no. But it was one of those, it's also one of those where what does my opinion really matter there? I know my risk, I know my reward, I know the conditions. I'm human, so metrics can shift and change, but my human biases may not catch up, right? And that's one of the things about traders a lot. The human bias tends to be different than the metrics a lot. And, a lot of times humans wait for the metrics to shift to their bias, and they get caught. And I've been victim of that or guilty of that, however you want to phrase it, many times in my career, and many traders have. But when it comes to how the challenge functions right now, and it just doesn't matter, right? Do I trust the market? I trust that it's going to open. I trust that it's going to have, upticks and downticks. I trust that it's going to, have worry points, and it's going to have, people making seemingly really smart decisions and really smart people seemingly making really dumb decisions, right? You may have seen the report that one of the biggest Tesla investors sold 99.5% of his position before the end of December. Probably loved it, right? Beautiful uptick, great. Stock went from 200 to 400. Well, it's at 800, right? So, there's always going to be that. And, do you trust it? Well, yeah, you trust that it's going to open. You trust that it's going to move. You trust that there are going to be things that happen at all times. And your job as a trader is, what's your risk? What's your reward? How much do you want to, how much exposure are you comfortable with? And making decisions in that framework. And as long as you make decisions in that framework, you're going to be in a good spot. You start making decisions outside that framework, now you're basically trying to be a crystal ball in many ways. And, that can feel really good when you're right. It feels really bad when you're wrong. So anyway, my last 2 cents on that, do you trust the market concept? And, I'll shut up about it from here. But anyways, thanks for hopping on. Have yourselves a fantastic day, and we'll talk to you this afternoon. Take care.